Welcome on my full course on how to day trade from A to Z in 2026. If you're someone who's just getting into trading or have looked at it last year, or someone who has traded but hasn't found a profitable strategy and wants a proven system, then this is going to be the video for you. This is going to be for you if you're a beginner all the way to advanced, because I'm going to dive into a proven strategy that has worked for me. If you don't know who I am, my name is Harry Sharp. Online, I'm known as Tradesharpe. I have shown my strategy over 3 years live documented on YouTube from entry to exit. A lot of traders cannot show this because they simply are not profitable, but this is something I've done, and what I'm going to explain in this video is a proven system that has worked for me and countless thousands and hundreds of others. So I know this system works. So with that being said, let's get into it. So I first want to explain what is actually trading. So with trading, the beauty is we can make money both when the market goes up and when the market goes down. Now, the advantage of that is that we don't have to be stuck on one direction, meaning if you invest money into a company or into a stock market, that stock has to rise in price in order to make the best gains. But in trading, you can ideally choose a direction of what you expect price to do and make the equal amount of money in both directions. Yes. Now, this is one thing I want to discuss, is that when you're learning a skill, it is obviously something that's going to be difficult. Too many people online make trading. It's probably why you got involved in trading, is it seems like it's an easy way out. It's an easy skill to learn and you can start making money next week. I can assure you that you're not going to make money next week. Now, you might get it from luck, but long term, it's not how it's going to work, because any skill takes time and experience. So I want to make that clear, and I want you guys to come in with realistic expectations and actually put in the work. So the next part is I want to discuss what are the type of markets here. So you can be a CFD trader. CFD stands for contract for difference. Contract for difference essentially just means that you're a trader who trades on regular brokers. So a broker is where you deposit money to trade. Another trading is futures trading. Now, futures trading means you trade the futures market. Now, the futures market means that you're only confined to futures pairs. Now, a lot of the pairs that you have in the CFD market, you will have in the futures market. Now, if you're from the US, I would recommend trading the futures market because laws are a lot easier on that. It supports it a lot more. That takes me to what is funded. That's a very popular thing that we're going to discuss later on in this video. But essentially, you don't need to have so much upfront capital. Back in the day, you had to deposit $25,000 minimum into a brokerage to get started trading. But these days, you can pay a fee, basically an entry fee into a tournament type, which is an exam that you need to pass, right, in order for them to give you funding, right? And that funding you can make money on and get a payout and have to give them a profit split. So what's the catch? That sounds amazing. The catch is that there's very strict rules. Most of these funding firms make money from people failing challenges, right? So when you understand that, that means that they should have a better edge than you. That's why I'm going to explain in this video how to build, and I'm going to explain my strategy that has worked amazing for me, that I've traded live. So the next thing I want to discuss is what is the type of trading. So you'll hear words swing trading, scalping, intraday trading, day trading. These are all terms that you're going to hear online. Now, you need to do what works best for you, right? The nice thing is all of the strategies I'm going to talk about in this video can apply to swing trading, scalping, day trading, intraday trading. A scalper, essentially, you're looking for a quick move in the market. There's also session trading. Now, that is my majority of my trading, meaning we have sessions. We have London session, Asian session, NY session, and these are referring to when the banks actually open. So those are our times of volume in the market. Volume means the movement we see in the market. We want to be part of the market. When we're getting involved is when there's the most movement. That makes most logical sense. A swing trader, on the other hand, will be looking to take a trade over days, weeks, even months. So they're looking to catch not a session impulse, they're looking to catch the whole market impulse, right? That doesn't mean you make more money because you're catching more of the market. No, because your risk is going to be bigger in terms of how big your stop loss is, because you're expanding the time frame. So you could get the same return on lower time frames that you get on higher time frames. It's just a different method of entry. All right, so now you have an overview of what trading is and the basics of that. Now I want to get onto the charts and actually show you what is TradingView and just show you around what do we actually use to read the charts, the candles and all of that type of stuff. So let's get into that. All right, so the first website you're going to go to is TradingView.com. Now TradingView.com is essentially where we're going to look at these charts. Now when you first use it, you're going to have like a white chart. You can just go and Google search how to make a template here, and you can literally change the settings, change the colors. I like mine on more of a dark setting. I use classic green and red candles. People use different colors. It's totally up to you. TradingView is going to show us what pairs we want to trade and allow us to analyze, right? So this is website number one that we want to get involved in. And what you'll see here on the right hand side is a lot of pairs. Now, those are different pairs you're going to be able to trade when you're trading Forex or futures, but I want to explain how a pair works. So if we look at something like GBP and JPY. If you see, it's the British pound against the Japanese yen. What that basically means is that this chart is showing the strength of the British pound against the Japanese yen. So it's like versus each other. If the British pound is getting stronger, then this chart is going to go up. If the Japanese yen is going to get stronger, this chart is going to go down. So it's always a battle between who is stronger, right? So if there's any news that comes out that strengthens the yen, then we'll see this chart go down because yen is getting stronger, GBP, JPY is getting weaker. Not the currency itself getting weaker, but against the yen, okay? Now, gold is compared against the dollar as well. So that's gold versus the dollar. And, you have different pairs and stuff like that. So you go and you find your pairs. The pairs that I like to trade are mainly going to be indices. So I like to trade US 30. I like to trade DAX, which is the German exchange. I like to trade gold. I like to trade GBP, JPY. And I'm more focused on gold, DAX, and US 30, So those are how it works. So we're segregated into different. So we have Forex pairs, which is just literally currencies, USD against the JPY, GBP against the USD. We have indices, which is going to be like your German indice, which is DAX. And you can trade all of those, right? You can trade whichever one you want. Another place worth making an account is going to be called Pip Labs. Now, Pip Labs is going to basically run off the same platform as TradingView, but it's going to allow us to backtest and simulate, kind of like a airplane simulator, but for trading. So all the concepts that we learn, we can go on there and simulate and replicate and practice using more of a real life environment rather than the current markets, right? So we can study. So that's the two platforms you're going to need to get set up here. And it's as simple as that, to be honest. So play around with that. It's going to be a bit fidgety. You'll have to learn how to use it. Any new platform is annoying. There's tons of tutorials. I'm not going to waste time, but this is where you're going to get started. And that's basically it. But this is the platforms that you need to know about and get started with. So let's get on to the next section and take it from there. The next thing we're going to get into is actually candles and time frames. What are candles? How are they made? That is a very important thing in trading. So let's discover how candles are formed. So the first thing we want to get into is actual candles. What are candles? What are time frames? What is a chart, right? You guys need to understand how to read a chart. Now, as retail traders, no matter what strategy you use, I use price action strategy. You will have to use price action throughout any strategy that you're using. It's a fundamental of the market. And in order to trade as retail, one of the key tools we use is candles. Who tell you otherwise? Just trying to sell you on some fad. As retail trader, candles are our information and every single strategy use them. So you need to get these down correct and understand how they're formed. So the first thing about a candle is it's going to look something like this. You're going to have a wick, you're going to have a candle body, and then you'll have a lower wick. The wick is actually showing you the highest and lowest point in that time period that the candle went. So right here at the top of this wick here, that's the highest point in 15 minutes that the candle went. And the low wick here, that's the lowest point in 15 minutes the candle went. The body shows you where the candle opened and closed. So the bottom of the body is where the candle opened. I'm going to put it as O. And the top of the body is where the candle closed. I'm going to put it as C. So during 15 minutes, it went up to the highest point of the wick here. Then it came down a little bit, right? And before that, it went down to make this wick, because if it never went down, this wick would not be here. It would be shorter or non-existent. And then where the open and closes is where the candle closed. So where it says O, when 15 minutes started, it opened, and where it says C is where it closed, and that's how it builds a candle. Now, if a candle is green, that means it went up bullish during that time period. If a candle is red, means it went down. So let's draw a little example here, and we can have a look at how that would look. So let's say we had a green candle moving up here, right? So this is how it looks, remember? So the candle would open here and close here. Now, why I want to show you this is the next candle. Where the last candle closed is where the next candle will open. So let's say we have a red candle here, and it went down during 15 minutes. That means it would look something like this, because it went down, right? The wick would show us the highest point that it went right here, and the lower wick will show us the lowest point, but here was the open and here's the close. So wherever the candle closes is where the next candle is going to open. So if we had another green candle, it would look like this, and then another one would look like this with your top and bottom wicks, right? And then we start to build candles there. Now, it's important to understand where candles open and close, because those create something called support and resistances, and those are basically going to be like floors and ceilings. And when we draw lines on the chart, we need to know where those bodies are, because we can use that to mark lines. So you've probably seen charts with lines on it. Those are how we make those decisions based on opens and close. I know it might sound a bit confusing, but it's honestly a really simple task. So even if you don't get it, just keep watching, because it will make total sense once I just continue to explain, and you'll just be like, okay, it's simpler than I thought. It was just a little bit complex. So now you learned about candles. The next thing we want to discuss is actually market structure. Market structure is extremely important and it's something you're going to need to learn. So let's dive into what is market structure. So when it comes to market structure, we have three different types of structure. We have an uptrend that looks like this. We have a downtrend that looks like this. And then we have a consolidation that looks like this. So I'm going to put it 1, 2, and 3. So how do we identify an uptrend? How do we identify a downtrend? And how do we identify a consolidation? So when you come to a chart, an uptrend will look like higher highs and higher lows. What do I mean? So if we look here, we have this high, right? I'm going to put it as H. Then we have this low. The next high has to be higher than the last high, so we call it higher high. And the next low has to be higher than the last low, so we put it higher low, right? And that's going to create an upside move, right? It's going to be a bullish market because we are making a high higher, we pull back, we make another higher high, we pull back. It's going up, right? Like a staircase, right? You think of it of a staircase, and you know there's no stair that is lower than the last one, okay? If we were to break that structure there, you see how this has broken now, where this circle is? Now we might be transitioning because now we made something called a lower low, because this low that was made is lower than the last low. Now if a lower high is made, LH means the high is lower. Now we transition to some downside because now we have lower highs and lower lows. So a downward staircase, right? So now we can visually just see that, right? And here was the point where it shifted because we started, instead of having higher highs, we made a lower low, right? It broke that low here, okay? So this is an uptrend and a downtrend. The easy way to think about it is upward staircase, downward staircase. Look, see if you see an upward staircase, look, see if you see a downward staircase, and that's how you identify it. But you want to know those higher highs and higher lows and lower highs and lower lows, right? Because that's going to kind of show you, you know, it going down. Now the last one is consolidation, right? Because sometimes it's just a mess. You have higher highs, lower lows, lower highs, all mixed together. And that just basically means we're going sideways. It's just a mess, right? So whenever we have consolidation, it's going to look something like this, right? We're just going to have, maybe it looks like an uptrend, maybe it looks like a downtrend, but it looks something like this. So it's just mess, right? Nothing's happening. This is totally tradable. You can trade in consolidation, but it's not going to give you a trend, right? It's not going to tell you, like, obviously if the market is going up, it makes sense to take buys, right? Why should we sell? We can sell in it, but more, you know, it's going to be more profitable to take buys in that scenario. So we need to understand what market structure is, because market structure gives us very important points. Now, this is where trading can get very complex. Is every single time frame is going to have different types of market structures. So we discussed a little bit about time frames. So what do I exactly mean by time frames? Well, the candles that I showed you, right? So I'm going to pop up another chart here. If I switch time frames, if I switch to a 1 hour time frame, it's going to show me that each one of those candles represents 1 hour. So higher time frames, obviously, even from daily to 4 hour, take more time to develop. So they're going to hold more weight. And when we progress into this video and actually talk about marking up the charts and how to make a top-down analysis, and all of that, you're going to see how important the higher time frame is and how the higher time frame is an instruction manual for the lower time frame to follow. So now you're doing pretty well. You're getting into learning how this stuff works. It's going to be a little bit confusing because it's a huge information overload. So take your time. But the next step we want to do is something I use, which is horizontal marking, which is support and resistance. It's the simplest form of marking up a chart, but in my opinion, it is the most effective from my research and from my data analysis and the thousands of trades and iterations I've done to compile this data in order to give me the real probabilities of what works and what doesn't. For me, this is something extremely beneficial, which is why I use support and resistance. So let's dive into that. So I want to first start off by some very, very basic things here. And this is just going to be an overview just so we cover all intended audiences watching this video. What is a resistance? Resistance when we have a bullish candle followed by one bearish candle close. I said very importantly, listen to the word close. Creates what? Creates a resistance, right? Same thing with a support would be a bearish candle close followed by a bullish candle close will do what? Will create a support. So that's how you define the support and resistance. Now, what if we have two candles? The better. One candle is minimum to define a support and resistance, but a real high should be two candles or more, right? So when we're saying a proper resistance is two candles or more, and a proper support is 2 candles or more. What I mean by 2 candles is 2 candles closing bullish away from the one that closed bearish, or 2 candles closing bearish. That's really to define, but that doesn't mean we still ignore 1 candle closures. They're just weaker, because if you think about it, a 1 candle closure on a daily time frame, if you were to go on a 4-hour, it would be multiple candle closures. So it's still strong because it's based on a daily. Whereas maybe a 5-minute one, 15-minute is not as obviously as strong as a daily 1 candle closure, right? That's what I'm trying to get out. So now let's get into how to actually mark up. So you're going to need horizontal lines. I love to name my lines. We're going to use gold here for this example. And we're actually going to start all the way from the monthly time frame, believe it or not. We need to really start from the outside. Now, the good thing is you only need to mark this once a month because the candles only close once a month. So you're only marking time frames when candles closes. So monthly time frame, if you look at it, we are far from everything, right? We had all-time high here, this, so you wouldn't have to scroll back, but on other pairs you can scroll back until you find a support and resistance and mark it. And once you learn from watching this video, so make sure to watch to the end and leave a subscribe and a like if you're enjoying it, by the way. It does really help the content. If we could get it up 500 likes, really does help, and I would appreciate it. You can go back and you'll understand how to mark it. Okay, so we can see nothing to mark. We don't mark this candle because it has not closed yet, right? 22 days till this candle closes. This support down here we don't need to mark because it's so far away, not even a reason to mark. So next time frame we go to a weekly. Same story with this. We only need to mark this once a week. Okay, so let's say we were down here. It would make sense to mark this weekly support here, and I'd name it WS. The reason I mark this, even though it's behind the level, remember resistance can become support. We can get a scenario like that where we retest this zone here. So I do still like to mark those. And then obviously our next resistance, you're always looking most recent, right? You're always focusing on most recent. Don't worry about things super far away. What is the most recent support and resistance? Support is all the way down here. I don't need to mark it because it's super far away from where current price is. I'm always marking relative to where price is. This weekly resistance, look, from here to here is almost 1,000 pips. So I don't really need to be marking these, but to just teach you guys, I personally won't, just to keep my charts cleaner, but just to teach you guys, I'm going to mark it anyways because price is so far from it. It's not really going to be relevant. But once a week, you should mark this, especially if we're close to one of these, okay? Because it's going to be important when you are taking trades, entering on 15-minute, 30-minute, 15, whatever. You need to know, because you could be buying straight into weekly resistance. It looks a perfect trade on the 15, but this is really giving you a guideline. It's showing you where you cannot trade on the charts, and that's so important. If you're trading in a place where you cannot trade, your trade has a high chance to fail, guys. Has a high chance to fail. So make sure you get this stuff right, because it literally is a cheat code, and it's showing you, hey, I have much higher probabilities trading in a zone without resistances and support, and I know my limits where I can place my take profits and where I can enter trades. It's literally giving you a cheat code. As long as you know how to execute with all of the other factors that I teach on my channel, I encourage you to go watch the videos. It really helps, right? It makes things super accurate and makes a plan, and it's just overall something you need, right? So daily time frame is next. So we went monthly, weekly, daily. Now on here, daily time frame, we do have this previous daily. I do like to mark these. So I keep this here daily resistance, because right now this is going to be a potential resistance. We can see some reaction, but not fully reacting off it yet. Otherwise, next one is all back here, but like I said, pretty far, man, pretty far. Don't even need to mark it being that far. So again, looking at most recent, we do not mark this daily support. Why? Because the candle has not closed. Don't need to mark it. Move on. Next, we go to 4-hour time frame. Look at 4-hour. Now we have some more. As we get lower, we start to get some more price action. So 4-hour time frame, we mark this one right here. Boom. This is going to be our 4-hour support. And then we look left, always looking left. Where's our next resistance? Not this one, not this one back here, not this one back here. No, most recent. And the most recent resistance is sitting right here. And we mark that 4R for 4-hour resistance. Right, so now we're starting to get our guidelines here. Look how nice this is. This is showing us where we can and we cannot trade. Next time frame I go down to is 1-hour time frame, and I do my markup. The next thing here is we have this. So this is an interesting one. What if daily resistance and this 1-hour resistance are very close to each other? In this case, these days I just put a box like this. The reason I don't move it up is because we reach daily resistance first. I could be taking a plan today where I look to take buys from down here. And if I buy and price suddenly rejects here and I put my take profit here, it's going to be extremely annoying and I'm not going to know why. But that small detail can secure your profit, but you will miss out because you're targeting the high and it doesn't reach the high. It rejects before the high, but we know why it's rejecting before the high, right? So that's definitely a possibility. So I just like to draw a little box like that just to cover those both zones there. When we move on to 30-minute here, we can see that we have a 30-minute support here, right? Most recent, that's a 30-minute support. So we can mark that 30-minute support. You can mark all of these supports down here, all of these. But like I said, when you pick a direction, you don't need to mark all of these. And the next thing is you don't need to mark something you're not going to trade. So for me, from here to here is not a tradable range. It's too small of a range. If you look at the average size of the candles right now, that's a 50 pip candle. And this range is only 35 pips. It's not really worth it. So in this case, I don't even need to mark that range because I'm not looking to trade it. So instead, I'll just keep this simple. I'll move this line down to here because remember, this range I'm not trading. I ignore this because it's not somewhere where I'm trading. I keep my charts clean. Really want my charts as clean as possible. These people who have tons of support and resistance line, it's fine, but I personally do not like to trade with like that. Like I said, I normally pick a direction and I'm pretty sure, and I only mark in that. So next time frame we go down to, which is the last time frame of the day, it's going to be the 15-minute time frame, which is my majority of my entry time frame. We can see we have a resistance here, so I know this won't be a tradable range. I will actually put a line there now because I know from here to here I'm not going to look to trade. So I'm going to put a line here. I'm going to put this as 15, and look, our 30-minute support is lining up, so I don't need to remark that. Support down here is also beautifully lining up. And now we have a beautifully marked up chart, and this is where I can plan. So I recommend you do this every single day. As a fact, I make the guys in my exclusive group every day send charts for feedback because it will take some practice to get used to it. Mark accurate ones, find which ones are relevant, not relevant. But the key rule is I'm always looking at most recent. So if we look at most recent now, most recent support would be this on 15, and most recent resistance would be this. So now you know how to mark up your charts. The next step is actually going to be identifying trading zones. We want to get into trading. I know you guys are ready to learn to trade, but we need to identify what zones can we trade in. What are LTAs? What are our trading zones? All right, guys. So the LTA stands for low traffic area. It's a term that I think was thrown out on the internet a while back. I mean, there's many variations to this. The smart money traders call it kind of like a fair value gap. You know, that's the similar thing here. I just know it as clean candle zones. You can name it whatever you want to name it. It's just a term in price action that we use to trade price action, and it's just something that's logically makes sense, and that's why people use it. There's nothing fancy behind it, but there is ways you have to use it, and there is considerations and special techniques to make sure that you're using them correctly. So the name is pretty self-explanatory. Low traffic area, clean candle zones. It's basically where we don't have support and resistance between one zone and another. It's basically clean candles. Now LTAs, you can call them in the Tradesharpe clan lobster trading areas, if you know, right? But no, you can name it whatever you want to name it, but the name is self-explanatory. So this would be an LTA here, right? So these are all bearish candles back to back here, and the reason why this is an LTA is because we have all clean candles here. So if you look at this, right, you'll see that there's nothing stopping price in this zone. Why? Because this candle opened and closed, this candle opened and closed, this candle opened and closed, and did not create what? A support or a resistance. A resistance is created when a bullish candle followed by what? A bearish candle closure is formed. That creates a resistance. So if we had a resistance in here, for example, if we had a bullish candle here like this, and then we had bearish candles continuing down, that would create a resistance here, and this would be an area where price could react. So essentially that would invalidate the LTA here, right? So these are basics about LTA. But if we have clean candle zones, what we expect is that a bearish LTA will allow us in the future to buy up to that zone, because what we expect in the future is that if price was able to move down easily in that zone, the next time when we're looking for buys, it should be able to move up easily through that zone, right? So of course we'll look at chart examples, so stay around. But the whole idea is that, look, now that we have clean candles here, if we have an opportunity to buy, there shouldn't be any issues of candles moving through this zone. Because why? Because in the past it was able to move through it smoothly, so we can expect a smooth move in the future. Now we may get a pullback in between this zone here, right? and that is totally fine. We may get, in the future, when the new zone is forming, we may get something like this. We may get a candle pullback, and then this one continues something like this. Boom, right? But that's fine. The zone is still filled. It's still continuing the LTA. Now, if we're coming back in the future for sells now, right? Because now this is a bullish LTA, right? We understand that actually our only clean trading zone is going to be from here to here, because that is where our next resistance is. Now, of course, marking here or here, getting accurate with your support and resistance, I recommend, that is something that you need to practice. I have my free course, which you can, start to understand how to mark those zones. But essentially, this is now your trading zone from here to here if you're looking for sells, because this is clean. And then your next trading zone is going to be from here to here because this is clean. This is considered a support, right? Because we had a bullish candle followed by a bearish candle, created a resistance, or we have a bearish candle followed by a bullish candle, created a support. So this is not going to be a clean LTA right here, but from here and down here, these are both clean zones, which is where you can profit off, because price was able to move cleanly here and price was able to move cleanly here. So LTAs can be multiple candles, they can be single candles, as long as the trading range is enough. And for me, the way that I trade, I need at least, like a 10 pip range for it to be worth it. 8-10 pip range. I'm not really closing trades at 8 to 10 pips, depending on the scenario. I would say 10 pips is the bare minimum. I'm closing based on structure, of course, but anything below 8 pips, I'm probably just making that a break-even trade due to my stop loss being generally more than 8 pips. It wouldn't be worth it. So always check how big your zones are. Use the measurement tool on TradingView. Measure if your zone makes sense to take a trade in, right? So measure that. It can be multiple candles, single candles, it does not matter. Now, the important thing is, okay, why is a resistance a problem? Why can't we just trade past? Like, how come here price just pushed past and still was valid to take a trade, or still, price just pushed past here, no problems? Now, the reason how resistances work, right? Resistances work like this. What they are is basically, if we want to get technical, we're just using, past information to present in the future. The same resistance here was a problem in the future here. We can see we never closed above. This was a very tough area to trade because it was a resistance. We can either reject or push through. Same thing here, reject or push through. These 3 times, it decided to reject. But look what we have here, guys. Look what we have here. This is going to be what? This is going to be your LTA right here. That's your clean zone. Why? Because look, there's clean candles. 1, 2 clean candles. There's no resistance in these candles. We're always using most recent information, right? So if there's no basically, things stopping us from moving price, we should expect in the future, if we can get above this zone, ta-da, candle getting above this zone, we can replicate this move and get a clean move through. And then where do you think we're next gonna stop? At the resistance. Where do we stop? At the resistance. Scroll back. Now let's have a look. What do we have here? Oh, another clean zone. Where's our clean zone here? Right? Look at this. This is your clean zone. All here, clean candles, right? Let's go here. What happens? We reject at the resistance. When we get above, guess where it stops? Draw a line. Look where it stops. At the next resistance. So why does price like to stop at resistance, right? And that's how we trade zone to zone. These clean candles are our trading zones, and then we target next resistance. Trading zone, target next resistance. Look, this is your trading zone, target next resistance. And you trade zone by zone using those clean candles as areas to take trades. But why does it stop? Now, on the technical side, these are basically resistances are created by profit taking. They're created by orders being opened at that certain zone, and when we drive away from those zones, when we come back to the zones, those orders can be generally filled, or we can just have general profit taking from algos at that. So that's the technical thing, but that's not going to affect your trading. Does not matter, right? Because if trend is bullish and everything's pointing up, resistances will be broken and supports will be respected. So we expect those resistances to be broken. So trying to sell at the resistance is not a strategy. I know what you're thinking about. Don't focus on that. Instead, think of the market as range to range and focus on using the clean candles as your trading zone. So the similar thing for sells. If you were looking for sells, this is not an area to sell right here, right? This is not a good place to sell. This is messy. This is extremely messy. At any point here, price could reject, like it's been doing here. Okay, in this scenario, you didn't get a chance to enter, but your trading zone would be this. Look at the difference in here. All rejections, 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 rejections. You can see by the wicks. But when we get through to this zone, it's a straight shot. Why? We have clean candles. And that's your trading zone. That's your LTA. That's where you want to be looking for trades. So now that you learn about trading zone, one of the most important concepts is actually called bias. Having a bias, what direction are we more than likely going to go today, is going to be very important when you come to trade a session. So we're going to discover what is bias and how to identify a trading bias. So congrats if you made it so far here. The next step we're going to get into is something called session bias. Now, fortunately, I've created an indicator to help you with this, and I said it would make sense why I discuss about that. So session bias refers to, in your session, is it London session, New York session, what direction are you going to be looking to take a trade? Okay, what direction are you going to be looking to take a trade? It's going to be very, very important to understand how to identify that and what factors can you use to be looking in a session. What most people don't understand is that when you're trading one session, it's going to be only a couple of hours, right? London session is around 4 hours is the candle, New York session around the same. So you're not actually trading all of this. This is a 4-hour time frame I'm on right now. You're not trading all of this. Your trade would be maybe from here to here. That's it. You know, that would be your trade that you're taking. So you don't really have to, you need to be able to analyze the whole picture, but in terms of actually taking the trade, there's a few factors that are going to help us find what bias that is. And that's simply going to be on candle closures. I was speaking about how important candle closures are. So what you're going to use is you're going to use basically previous daily candle close and previous 4-hour candle close. So if you go to the daily time frame and the previous daily is closing bullish here, and the previous 4-hour is closing bullish, that will allow me only to look for buys in that session. I will not change my bias, right? So let's mark that and make that very, very simple. Remember, this is closing basis here, not open candles, closing candles. If previous daily closed bullish, if previous 4-hour, that means the 4-hour candle before you start trading, before your session, the one that's closed, not the current, the one that closed, session bias is bullish. Only buys make sense today. And I'm only looking for buys because if someone basically had a gun to your head and told you the only information I can tell you is a daily candle close bullish and a 4-hour candle close bullish, what do you think the next candle would do? You'd be like, probably up, right? And it is as logical as that, right? It makes more sense. Now, of course, you need to do the analysis, top down, markup. Are we at resistance? Are we at supports? Does the market make sense? Is market structure bullish? What is my analysis from today? Where are we coming from? And this is all going to be part of the journey of learning to trade. Is what is the analysis? You need to develop the analysis, but part of your analysis is going to be your session bias. What are you looking for, buys or sells today? And obviously the opposite means that I would look for sells. If I saw daily candle close bearish, previous daily and previous 4-hour close bearish, I'm only looking for sells, right? Again with the analysis. And most of the time you're trading a session, so you expect the next candle to form bearish, right? Or in this case, form bullish. But that is pretty simple. So let's go ahead and identify a few session bias here. So now let's go skip a candle. All right. What happened here? It was easy, right? When previous daily closed bullish, previous 4-hour closed bullish, but now we still have previous daily closing bullish. So when previous candle closes bearish now, we have a problem. And what's the problem? Problem is now we become mixed session bias. What does that mean? That means we can look for both directions. And this is where, tying back to what we learned before about having your trading zones. Because in mixed session bias, you could have price inside of a range, and outside of this range, here you have a LTA clean candle zone to take buys, and below you also have a clean candle zone you can take sells. But this is where you need to use a bit of work and you need to analyze what the hell is going on the charts. What is price doing? Price has been moving up during this time here. Now we have found a resistance. Look left. Are we at a resistance? We are pretty close to one. We are pretty close to a resistance, so we can start to see some sort of pullbacks. Remember, you are trading only the next 4-hour candle, but at the same time, it could continue bullish. So a mixed session bias can be any way. We can see previous daily close bearish, but previous 4-hour close bullish. Check where is that 4-hour closing bullish from. Is it closing from a support? Is it closing from a resistance? Where are we closing from? Because if a 4-hour candle is closing from a support, something like this, you see these type of closes here, when we get this type of close from a support, it's probably going to mean that more likely for us to continue up. But if we close below and then a 4-hour candle is closing bullish, that could just be a small pullback to continue the staircase, because you have to also understand to read candles backwards. Because if markets move up like this, don't know why it's squiggling like that, but anyways, this pullback could have been for 4 hours, but it's just a pullback to continue price, equivalent to this. But since we're trading a session, you can still catch an opportunity for sells depending on the range. So let's go into price and see what's happening on the lower time frames and see if we can find that LTA we talked about, which is actually going to be below this zone right here. So if price was to get below this zone, we have clean candles here. That's where your sells could make sense. And on the other hand, the buys could make sense above here. Why? Because we have an LTA. Well, actually above here is where our LTA is. That's where our clean candles are on a 15-minute time frame, which would be a trading time frame. So in a mixed session bias, you can take both. If today was a bullish session bias, I would only be looking for buys, no sells. But in mixed session, I could also look for the sells here, and you can see what ended up happening. We closed below and got a pretty nice move to fill into the next support. So that gave me the okay card to take sells in a scenario like this. Now, this is obviously it in a nutshell. Now, there's something that will help you identify bias. So remember, bullish session bias, to recap, bullish session bias is when we have previous daily bullish, previous 4-hour bullish. Bearish session bias is previous daily bearish, previous 4-hour bearish. Mixed session bias is when either or are mixed. Daily could be bearish, 4-hour could be bullish, etc., etc. I have created an indicator called Tradesharpe session bias. You can go to indicators on TradingView and type Tradesharpe, just type my name, Tradesharpe, and then click this one here. This is session bias. This will pop up. You can adjust it wherever you want on the screen. You can have it bottom left, bottom right, but you can see it will tell you if it's a mixed session bias, exactly like we just discussed in this example. We have a mixed session bias. It will tell you what the session bias is. Obviously, if I rewind to 4 hours before, when we had a bullish session bias, my indicator will say bullish, right? There you go. You can see. So it kind of helps you. It kind of gives you a little bit of help. So make use of that. You can even make it bottom. You can change the settings here. You can make this bottom right here, so you can see it at the bottom of the screen. There you go. So you can really customize it to where you want it to have. And it's such a small indicator. Yes, and it costs nothing. So hopefully that helps. This is session bias. This is going to start to help you identify what direction to look for in the chart. So now the part you've all been waiting for, the juicy setups. How are we actually going to enter the market? What strategy are we going to use to enter the market? What is the setups? What is our entry strategy? And that's what we're going to dive into this section. This is the juiciest section, everyone's favorite, because these are the actual entries that I take on a day-to-day basis when I trade in the market. So I call these setups setup 1, 2, 3. They're based off price action, and these are my most common setups that I use, and the way I apply them is specific to me, where the concepts can be used in general price action. Now, setup number 1, which is the first one I'm going to discuss, and I'm going to get through them and show you live examples so you can get a full picture, so make sure to stay to the end, is my most used setup. Now, this has made me the most money, this specific setup here, and it's very, very powerful, very versatile, and extremely simple. So what we need for setup 1 is we essentially need some sort of range. I execute setup 1 on the 50-minute time frame, as I find that is the most effective time frame that you can use. The idea for setup number 1 is we want to have this type of consolidation here. This consolidation is essentially creating liquidity. What we do after that consolidation is we look for an expansion of that, okay? So this is where liquidity is created. This is where people can get chopped up, and we are trading the expansion. What are we doing? We're making sure to trade between zone to zone. So you need to have your support and resistance levels marked from daily down to the 15-minute, because you're entering on the 15-minute. You just mark the most recent. I will show you some examples, and I'll also link you to a playlist. You can check my playlist. There's fundamental videos. Watch the support and resistance video there, because I don't want to make this video like 45 minutes long going through all of those concepts. I want to specifically talk about the entries and talk about the entries in depth. So check out those videos, and if you're enjoying this video, leave a like, and if you do enjoy it, support the channel. I would appreciate it, subscribing and liking. So what we need is some sort of consolidation. I prefer there to be 2 structural points, meaning we have bearish candle followed by bullish candle, and we have, you know, a bullish candle followed by bearish candle. We have that twice. So basically 2 structures that's showing me good liquidity. You only need 1, to be honest, and I take a lot of setup 1s with only 1 high being made, 1 low being made, and then we get the continuation. And I'm going to show you exactly how it continues, but we need this liquidity to be created. Now, there's 2 specific things that we're going to need, and this is a must for the entry. We need to know what direction to look for an entry, because today what could happen is that you could, you know, get below here, it fakes out, and then you get caught in a fake out, right? So I've kind of spoiled it. We're looking for close above or below. But what ends up happening is you don't know what direction. That is going to be dictated by something called bias. If you're looking for buys, you need at least a daily or a 4-hour closing in the direction you're looking for the trade. If both are closing together, daily is closing bullish and previous 4 hours closing bullish. So the previous daily and previous 4 hour, I made an in-depth video, not the last video, the one before that on my channel talks about this. And I have a free indicator that you can use to tell you what bias is. You follow that, right? You go with bullish bias means only in this breakout, I'm only looking for buys, right? I'm only looking for buys. So how does the setup work? Setup is extremely simple. We have our consolidation. We need clean candles here. So if we have a resistance right here, remember we done the markup, it's not going to be valid because you're buying into resistance. You need a clean zone. So if we're looking for buys, we're going to have a clean zone in the past. You look left and you say, is there no resistance? Is it just clean candles? Back-to-back candles closing like this is going to give you a trading range. If you don't have that, you can't enter these trades. You wait for your support and resistance. You wait for a candle closing above that resistance. On a 15-minute, you can take it 1 hour, 15, 30, whatever works for you. I like the 15. Next candle needs to come down, make a bottom wick. Let me know in the comments if you want a separate video on that. And then we wait for break of high to get the continuation. Where do we target? Our next resistance. And that's it. Stop loss goes below the candle that breaks out. If it's a small candle, put it below the structure. Always safer. Okay. Same thing for sells. So I want to get into some examples because that's where it's really going to be cleared up here. So let's look at that. So this is an example of a trade I actually took live on stream. You guys can watch my stream Monday to Friday live on YouTube London session. Check it out. And this is a gold buy I took. Now, same type of idea. I'm looking for the candle to close above. In terms of here, we have one structure. I have no resistance. My resistance level is the 3705, which is also a key level. Now, the reason why I took it above 700 is 700 is like a flat number. They're known as key levels. But I want to show you a concept here. If price was to just close above here, this would be invalid. Why? Ask yourself why. I'm going to give you 3 seconds. If you didn't answer, it's why you're still watching the video, so continue to watch it. It's because this was a previous 15-minute resistance. In the past, this could be 2 weeks old, 3 weeks old, doesn't matter. If there's a resistance, I have to buy above it. I can't buy above the most recent. I have to buy above the resistance that's there. So I'm waiting for a close above here. We can see there's a close above here. I didn't like that we closed below 700, so I waited for one more close. If that 700 wasn't there, you just go breaking a high, forget about it, and you take the trade and you can see something very, very clean there. Now, if we look here, here's a sell option of the same. Towards the end of the video, I'm going to show you some trades in action so you can really see how the action forms. So make sure to stick around about that. You probably heard when I've talked to the guys in the exclusive stuff, me say setup 1, 2, 3. So now we're making a video about it. So now you guys won't be confused. So this is a setup 1 towards the downside, right? Because it works in sells as well. We can see we're coming in a sell bias here today, moving towards the downside. We get the consolidation. Here's a 4-hour support. Our next target is this little support here. I get a close below. I enter break of low, same trade. Now I want to show you an option that failed here. So this option failed today. I had one structural point. We closed above. My next resistance was here. So that's where I was targeting. And I was going to go break even there. Because yes, it's not a one-to-one, but with volume, I can push through this. As long as it's not at my entry, I don't mind there being a small resistance here. I can try to push through. But today there was just no volume. And sometimes that happens. When there's no volume, that's when most likely the trade is going to fail because there's nothing to continue. It needs to consolidate, grab more liquidity to continue. Now, I was expecting with it being London open time to grab some volume, but it was not there. Possibly my mistake in this trade is this is too much of a push for price. This happened pre-London, so I thought London can give the continuation, but we were just consolidating today. Ended up consolidating, coming down here, and then giving us another setup that I'm going to discuss about. So sometimes that happens, and you know, this trade is not 100% win rate. It's above 70. So you're going to have these. Don't feel like you've done something wrong. There are always mistakes that happen in trades. Otherwise, we'd have 100% win rate. So let's get on to setup number 2. So setup number 2, we talked about a continuation trade, how to continue, but what if price has already continued? At that case, we're looking for some sort of pullback. Now, this looks extremely simple, but it's not as simple as this. This is just a diagram to give you the concept. The actual application is a little bit different. So the essential idea we're looking for is that price has pushed up here. We don't want to be the guys buying these highs or selling these lows and then getting caught in this pullback. Imagine you bought right here and now you get stopped out. It's probably happened to most of you, happened to me for sure. So instead, what we want to do, we want to wait for the pullback and we need some sort of support creation. We need a bullish candle to show us price is ready. But where we pull back to, right, where we pull back to is very important. We need to pull back in a specific way. If we've pushed heavy before, maybe one pullback is not going to be enough. We need lower time frame structure. We don't need lower time frame structure if there's heavy volume, but this is some stuff that's going to be needed and added. Otherwise, if you just wait for a pullback and one bullish candle close, the next candle close you can get can look something like this, and you're going to lose. You're going to lose because price is just going to continue down because it has no reason to go up here. There has to be a reason. But the idea is instead of buying the highs here and getting caught out, we're waiting for a pullback. And with that pullback, we can use this pullback as our clean trading zone and target the high it's made. So this creates us a target, we pull back and we trade back towards that target. Entry and stop loss is the same, below the candle, entry break of high, same concepts. Let's have a look at some examples. So here's an example. Again, one of the trades I've taken on stream. I'm only showing you real examples of real trades I've seen. You can go search the date of this and watch the stream replay. My link of my journal and track record is in the description of all the trades I've taken live on stream from entry to exit. So you can actually watch these back and see how I took them. So that's pretty cool. This idea here, pretty nice. Pushed up here. I don't want to be a buyer up here. It makes no sense. Why should I buy here right at resistance? We discussed that. Makes no sense. So I wait for price to pull back. That pullback creates me a clean trading zone. I don't have to trade at all these lines, which is all these resistances. No, instead I wait for this. This becomes a clean trading zone. This 1 hour is a watch zone, so I can watch and see if we reject here, I'll just get out at entry. I don't lose anything. And importantly, we retested here. We retested the bottom of the range, showing me that we have grabbed liquidity. All of my supply and demand traders, you'll know that as a demand down there. So essentially, we're retesting the bottom of the range, showing me confidence, bullish candle to give me the confirmation that we're ready to go. Because if this wanted to continue down, it would have grabbed liquidity from upside and pushed through this. So I can avoid that by having the bullish candle close. Boom, first target should be here, but that wasn't my one-to-one. I extended it to this level here, took profit, and happy days. Here's another setup number 2. Now this one's a little bit different. This one, we came to the top of the range. I did not want to sell the lows here. So instead of selling the lows because we saw too much, we closed right at 4 hour support. I don't want to be selling at 4 hour support. So I wait for the pullback. I still had a bearish bias today looking for sells. And what do I wait for? I wait for this nice liquidity grab, bearish candle close to confirm, retest top of the range, entry break of low, and target a 1-to-1 here. Or you can target the bottom of the range, to be honest. But I was happy with that trade and took that right there. Now, I want to show you a different style of setup 2 that can happen. Now, this is very interesting scenario. As you can see here, price pulled back very heavy. And then this one here failed. Why? Because we broke structure. So we changed something in the trade here. But that doesn't mean that, oh, we broke structure, let me take sells, and then you lose the sells. No, this is where bias, remember I told you about bias in the beginning of this video. You have to watch my bias video. This indicator is free on TradingView called Tradesharpe Session Bias. You can get it. And it showed bullish here. So that means I need to stick to buys, keep myself safe. So instead, I use this resistance here as a buying opportunity. Anything closing above that, we kind of make setup 1 here. And now I can take that pullback trade and continue towards the upside. So you can see how that changes, right? And how much opportunity we can have when we start to mix and match. Moving to setup number 3. Setup number 3 is that if we don't get a chance to pull back, price is in heavy movement, but we need some sort of structure, liquidity to give us a move. What we look for is we just look for a candle pause. So what's happened here is that we can see that price closed too deep. This might be a 100 pip move. 100 pip move is too much. We don't want to put a 100 pip stop loss and have a 40 pip target. Makes no sense. So we wait for price to make some sort of what? Some sort of pause in the market. And on lower time frames, like a 5-minute, this would be a pullback. And then you are entering the continuation. Have maybe 1 or 2, probably 2 is better. 5-minute bearish candles, and then boom, you're entering once it continues. And we can use that below stop loss here to keep a tighter stop loss. We enter break of high and we look for the continuation. Now, the important thing about this setup number 3 is that we want that this bottom wick to be longer than the top wick to prove to us that it's created liquidity to continue. Okay, very important. We want that. So we want to pause. We want the bottom wick to be longer so that it grabs liquidity, proving to us that we're ready to break the high. If we had a long top wick, it's showing a rejection from the upside, not the same. So let me show a few examples. So this was an example I took live here. This is, you can see how we've closed deep above here. Candle closed bearish. We have a longer bottom wick here, entry break of high. This is a liquidity grab. So I put my stop loss below there because we went down to grab liquidity. If it didn't, then I'll put it below here. Targeted. Here I was trying to get 1-to-1, but it just fell short. Stuck at this resistance I had. So I ended up closing at this resistance and made a little bit less, but sometimes that's how you have to adapt. So I also want to show you guys that. Here's an example on the charts as well. As we can see here, we are looking for upside, big pullback here. This is a pretty big candle here. If we look, 300 pip candle, target here is only 140 pips, makes no sense. So instead what I can do is I can take a position breaking this high. You want to go break highest high, put stop loss below the candle. Now my stop loss is a lot smaller now, right? And I can target and actually get paid a 1-to-1 once we hit that resistance up there, right? And it will actually start to make sense. Yeah, there we go. So if you imagine I took the trade and I put a stop loss below here and didn't wait for this, you can see now I'm not even at a 0.5. I'm not even 0.5% in profit. Whereas if I waited for this confirmation because it's a big candle, now I can get to optimize and actually get paid here. So very important thing. Now I want to go into some very specific examples to wrap up this video. I'm keeping this short and sweet, so make sure to watch this section, probably the most important section, as we're going to look at some examples here. So what I want to do is I want to hop on a simulator and show you how these trades play out. And this is an amazing example. So this is actually on US 30. You can trade these setups on any pairs, but I like this because heavy volume. Here's a nice one. 2 touches. We get the breakout candle. We're ready to go. We're ready to go. We have a massive, look at where my next resistance is. All the way up here. I have so much room. Look how clean the 4-hour is. Let me just show you look how clean these candles are. Beautiful trading range, right? Pushing bullish today. It's time to go and party, right? So we get the close above here. There we go. Now we look for what? Now we look for bottom wick and entry break of high. So we're going to actually put a buy stop and it's going to look something like this. Breaking high. Stop loss has to go below the low in this scenario here. And in this scenario, we're going to target a 1-to-1 because it's a big breakout candle. So we don't want to be greedy. And then that's it. That's it. So we're going to play this here. And this is a great tool for you guys to practice. Definitely make use of this. And it's amazing for me to show you these examples. So we're going to skip it. Oh, that went super fast. Well, there you go. That's how TP was smashed. What a fast setup. Jesus. So normally we want a proper pullback there, but wow, that was lightning McQueen. I actually skipped it too fast. I went a bit 100x, but I'm not going to replay it. You can see what happened. That was the trade that hit. There we go. So that was good. That was good to see. Now I want to show you. Let's say you come to the market and you have this scenario, or you didn't have a bottom wick, so you couldn't enter. This is where you have to wait for a pullback, right? So you can't do anything. Shit is just pushing, pushing, pushing. You're like, man, what should I do here? No problem. Wait. Just wait. Just wait because you need a pullback, okay? Don't be jumping in here. Now, imagine a bullish candle formed here. Wouldn't make sense because it's not retesting anything. How we saw on the 4-hour, it's such a clean zone. So this could just be a pullback to continue maybe a downtrend. So it's not ready to take. Okay, and now we're pulling back so heavy, you need good confirmation. So instead, what do we see here? Boom, we retested something now. Boom, next candle does what? Retested again. Boom, bearish candle here. If you look at even lower time frame, we have some nice structure forming here. We're getting this change of structure type movement. Now what we can do is with this bullish candle, we can say, okay, now we have that support. Setup number 2 here, I can end up doing what? Taking a buy. So now you can put buy stop break of this high. Now, stop loss goes below. All the wicks would be safer here. All the wicks will be safer to give yourself, the maximum opportunity here. And then, you can target your 1-to-1, or you can target all the way back into this 15-minute level, whatever you want. And then we're going to place this. Now we're going to slow this down a little bit more so we can actually see the price action, because that's the power of this, is I wanted you guys to see how it moves. So hopefully we should have waited for bottom wick first, but let's say bottom wick happened. Now we would enter break of high. So we would avoid all this drawdown by waiting for bottom wick. So that's a good thing that you guys can see is why we wait for bottom wick. So we can avoid all this drawdown. But ideally, let's speed it up. You wait for this bottom wick. As soon as it flips, it's ready to go. So let's see how this looks. Boom. Almost flipped actually. There we go. So that's where you'd be enter. You avoid all that drawdown. Only holding this tiny drawdown now. Now we're starting to get going here. And this is what's amazing about this. You guys can actually practice a little bit sped up and gather data on the setups, practice them risk-free environment. That's why I love it. Very, very powerful tool. And it's good for me to show you how you go through a trade, boom, TP hit. And that's it. Support creation, beautiful setups. This is an amazing example because we have a setup 1 here, setup 2 here. And if I do remember, we have a sort of setup 3 here as well. Let's see. Yeah, so here's your setup 3, right? Big candle push, close is bearish. We have a short top wick, long bottom wick, and then boom, break the high, and there you go. All setups together. Is an insane example that. So this is how it works. All right, guys. So we're here on the charts, and the first thing that people think is that if we're trading the lower time frame, we need to be up on the 5-minute checking that out. So that's the big misconception, and where a lot of people get it wrong, including myself, is that actually you need to start on the higher time frame, regardless if you're going to be trading the lower time frame, because the lower time frame is generally just a mess. The lower time frame you get, the more of a mess it becomes, and you need clarity in that mess to use it to your advantage and have an edge. And that edge is going to come from understanding higher time frame, because think of higher time frame as a user manual. It's a user manual that is guiding what the lower time frame is going to be or needing to do, right? So that's what's super important, is that the higher time frame works as a user manual, the lower time frame is following that user manual and building the higher time frame, right? Because higher time frame guides, lower time frame builds what the higher time frame wants to have. So hopefully that example makes sense, and it's really important to understand we need to start on the higher time frame. So right here, gold is at around all-time highs in this example here, and what we need to do is do our markup. I have so many videos on my channel about proper accurate markup. Last week's video even covers that. Be sure to watch that. It's what I do on a daily basis. Even when I go live, I start mark up my charts so I know where I can and cannot trade. It gives you a guideline. It's basically like a hack telling you where you can and cannot trade you. So in this sense, I'm going to run through it quickly just to save you guys time, because I want to make this a full video for you guys on how to trade this strategy. So daily time frame, we're going to mark this resistance here. Now, this is a gap because of how this brokerage feed is, but normally we would mark it. Now, what we're doing is we're marking most recent support and resistance. Like I said, next time frame we go down to is 4-hour time frame. Again, we mark most recent. Look left, what's the most recent resistance? This one right here. So we mark this 4R. What else do? We mark the support here. Okay, so this is now our markup starting to happen, right? So this is our higher time frame. We do that from the daily to the 4-hour to the 1-hour, right? On the 1-hour we have resistance here as well, right? And we just work our way down, okay, marking up where we can and cannot trade, right? And I like to label them so I have clarity here, okay? And next thing we need to do is understand, okay, what is price doing? What direction can we trade in, right? So as you can see, it's helping from all time frames, working our way down. Now, we can get it advanced into bias, which is also another video I have, but this is called bias. We're trying to figure out what direction are we looking for today. And the way I like to do this is check how the previous daily candle closed, which is closed bullish, and how the previous 4-hour candle has closed, which is closed bullish. So that means for my session, if I have previous daily candle and previous 4-hour candle before my session closing in the same direction, I should be looking for the direction they closed in, which in this case, bullish equals bullish, right? That means I should be looking for buys. Regardless of that, I think it's pretty clear that gold has been in a clear uptrend here, and buys have been the favorable trade here. So you want to follow the trend. Trend is your friend until the end. So this is the kind of motto you want to do while using this. So like I said, previous daily bullish, previous 4-hour bullish, put them together, we should be looking for that. Now you may ask me, Harry, what happens if previous daily is bullish and previous 4-hour is bearish? That's a mixed session. Essentially, that means we can look for both directions. I like to keep this video short, and of course, that video is on my channel. So I'm giving you guys all of the resources. All you have to do is go and check them out. Now, what's the next step, guys? The next step here is going to be, how are we going to navigate getting onto that lower time frame? So in a day like today, we're looking for buys, right? We've gone down, we did the 1 hour, so we don't need to mark any of these supports down here. Why? Because we're looking only for buys. So I'm only concentrating what is on our way back up here. So the next thing we have to find is where's a clean zone we can trade in, right? That's going to be extremely important. We have a 15-minute resistance here. Now we need to make sure that we are not trading into any resistances. So we have the daily here, which is why we have to do the higher time frame markup, because without this, then people won't really notice there's a daily running through this here. But otherwise, it's very clean. It's very clean, and we won't have to worry too much about this daily if we can trade to it, right? Because it's not the strongest daily. As we can see here, it's kind of that gap, right? It's that gap, and 4-hour resistance is a little bit lower here than that daily. So we don't know if it's an accurate daily. It's more of a question mark, but I rather have it marked than not marked, okay? Where we're going to be trading is clean candle zones. What do I mean by that? The candles have to be clean. You can't have support and resistance here. You can't have any lines, because if it was not clean, you would have a line. So trading from here to here will be valid, yes, from here to here will be valid, but you have to measure, is it really worth it? Because if you're trading for 12 pips and your stop loss is 80 pips, it's not going to be worth it, right? So you need to be trading in a zone that will be worth it. So for me, looking for buys, again, instead of going to the 5-minute time frame, I want a confirmation from either the 15, 30 or 1 hour. One of those candles has to close in my favor. Close. What do I mean by in my favor? Needs to close above a resistance. In today's scenario, looking for buys, I need it to close above a resistance. What is a resistance? Basically something like this, where a candle closes bullish, candle closes bearish. That would be a resistance. Right here is a resistance. So I need something to close bullish, okay? That's the first thing I'm going to do, is wait for one of those candles to close in my zone. And then I can scale down to the 5-minute and use that to find an accurate entry in a scenario that I'm going to show you like this. So we skip a few candles here, and now we can see, okay, we're getting into this zone here, right? So this would be a valid trade. We closed above, but what makes it bad? Because we have the 15 resistance there. So in terms of a setup, it's valid, right? Because we closed bullish, we're above the resistance, right? You can take this as a valid setup. Stop loss will go below the previous 15 and you would target the next resistance. But check this out. The next resistance is actually there. So I'm not taking that, man. I'm not taking that. That makes no sense because you don't have the room. So now we wait for more room. So we check this next candle close here. Boom, it closes above deep. Now what the problem is here is when now we drop to the 5-minute, we look at the issue we have is that we have pushed all of these candles here, no pullbacks except for just now, because just now we have given this one candle pullback. So we have the 15-minute candle confirmation here. 15-minute candle has closed bullish here. We have range, right? Our next resistance is about 42 pips away. So we have space to trade to the next resistance, okay? We have this one candle pullback, and this is where we scale on the 5-minute time frame to find a pullback, and that pullback will give us an entry. Now, the bigger the pullback, the better the entry. So let me give you an example of how that should look. The one candle pullback which we have right now, this is, I call it a setup 3. So normally we take this on a 15-minute, right? You can take it on a 15-minute. This is how the 1 5-minute candle pullback looks like. Also can have a wick here. It's even better if it has a wick. But on the 5-minute, it doesn't matter too much as long as you have this wick to break here. But you can have this one candle pullback right now. So what do you have? You have the 15-minute candle closing above, one candle pullback. The next candle breaking the high will be an entry trigger to take what? To take a buy, right? Take a buy, put stop loss below the candle low, entry break of high. And this is what is called a thunderstorm. So if you look at actually my journal here and we look at this thunderstorm setup here, 100% win rate, okay? On the ones that I've taken so far. So these are extremely valid when they happen. Most of them actually happen quite a lot, but I just classify them as a 15-minute trade just for simplicity of journaling. But essentially what it is we have the 50-minute close, and then we have that 5-minute one candle pullback, and then we go, right? So that's in high volume. This works very well. I'm going to show you a second scenario, which is why it hasn't been really noted in my journal too much, the thunderstorm, because we're getting the second scenario a lot more. But why is this called a thunderstorm? It was a funny story. I was live streaming. I took this trade live. The minute we got entered, there was thunder happening, and then it went straight to TP, so we ended up calling it a thunderstorm setup. Essentially, how you take this trade is now running the 15-minute stop in this scenario is very steep stop, right? So what would we want to do? We would want to run the stop a little bit better and have a pullback. Why do we need pullback? Pullback create liquidity, guys. when we have a pullback, it creates liquidity, and liquidity allows us to give us volume to continue price. So where would we target? We target, of course, that resistance, because that's our next zone. You can see it gives you to a 1 to 1.5. This definitely makes more sense to take this type of trade here. This is more aggressive for sure. We only have a 1 candle pullback, which is why I'm going to show you something which happens more often and then go show you live examples of that happening. So here we go, breaks the high. You would be triggered here, right? You let it make a bottom wick. This would trigger you. You're in a little bit of drawdown, but drawdown is not a bad thing, right? And then boom, it starts to continue pretty smoothly here, and we eventually will hit TP. But before we hit TP, I want to show you something even better, okay? So what's even better is if we can form 5-minute structure. What do I mean by that? We use the 5-minute, right? Remember, we always have that 15-minute confirmation. When I show you the live examples, this will all make sense. We pull back, and then we break the high, and that break there is your entry, okay? So what that kind of looks like is that looks like, okay, we're moving bullish here, right? Price is moving bullish. And instead of just doing a 1 candle pullback, which is pretty risky, right? Because not that much confirmation, still valid, but pretty risky. We actually end up forming a proper structural formation, right? Which means we form a support and a resistance and break above the resistance, right? Something like that. Now, this is very juicy because this we can use this structure here, down here, to protect our trade. Meaning, if we get stuck in drawdown, this can protect our trade. Compared to this, it could just break the low, you can be stopped out. That's the risk. But whenever you have structure, not only does it create liquidity, it gives you more confirmation that something is protecting your trade. So in this sense, we can take the same idea, break of high, and stop loss below the candle low. And we can use that same concept to then take the trade. So if we go fast forward on this, we'll see how that ends up happening. So that's the exact structure that we want right there, right? That's the structure that we formed. That would be your entry, break of high. Stop loss would go below the low here, right? That was made. And then you target the next level. Now, in this case, this would be pretty close to that previous level we had. So if you're expecting volume to push through, you can use that previous level as a break-even level because it's enough in profit to use it as a break-even level. Let's try to draw these positions so we can separate them. And that's basically your 2 ways. Now I've used the 5-minute to scale into one trade, while the 15-minute just looks like straight up, right? 15-minute looks straight up, but I've used the 5-minute to scale in, and that's how I'm using it. So realize I'm just using 5-minute to find entry. I'm not actually using it as a full confirmation. Confirmation came from higher time frame trend, higher time frame closures, everything on higher time frame. 5 I've used to scale in, and we can just see how these positions. So first position would have hit TP, second position TP, and you can see how that works. Now what's very cool is, guess what? That little 5-minute pausing candle, that little candle that formed here, I want to show you something very special about this. And this is the small details in the market that really matter, is that without that pause candle, this pullback actually respected that low that was made. That candle formation was respected with price, which is what gave us that opportunity to continue bullish. Because without this here, there's a possibility it can really push down. So without yapping too much more, I would love to go into a few examples. I want to start off with this example, which is on gold. Now, what I want to show you here, this is the same setup. We have a 15-minute candle confirmation close, but what I'm going to do is I'm going to use the 5-minute to scale into the position, something I took live on our live streams. Make sure you are subscribed to join me live every London session. I stream live and show you how I trade for over 1.5 years, which is how I can give you this data and accurate data. So let's go ahead and fast forward. So you can see I get triggered into the position here, and now we're gonna, hopefully I'm gonna switch to the 5-minute time frame. So let's see if I can switch to the 5-minute time frame here, so we can see how the 5-minute looking. Perfect. So that's the 5-minute, how the 5-minute looks. So remember, we just covered that structure. What's even better, we had a straight push, we want structure, and we close above on the 5. Look where my entry is, break of high, same trade. But what happens in this trade? In this trade, I get stuck in a little bit of low volume, because one key piece I didn't tell you about, which if you stayed around in the video, right, you will get. So these people who just skip the video now, boom, they don't get the key information, is you need to be trading in times of volume. London Open, New York Open, these times here. And recently, Asian Open has been great on gold, right? That example was actually from Asian, because Asian's been pushing amazing on gold, okay? the example I showed you before. But this was taken in London session on my stream here. So yeah, definitely if you're enjoying the video so far, leave a like and let me know in the comments if it is useful or you want me to explain things a little bit different. I need to see that feedback because I make these videos based on them as well. So 5-minute structure is created, broke the high, but look what happens in this trade. I get stuck in a bit of low volume time and price actually unfortunately pulls back on me. Now luckily I've been trading for a while. I stay pretty calm and understand it's a game of probabilities and statistics. So here I just explain the whole trade and how we're just pushing down on 1 minute. And, you know, at some point it would be nice to see a relief. We had good structure on 1 minute and hopefully we can start to bounce. So here I start to explain about the potential bounce zone. And that potential bounce zone, believe it or not, is not only previous 15-minute structure, it's also that 5-minute structure. So we have that to protect our trade. So you can see I'm holding very sweaty drawdown here, almost at stop loss. But I'm pretty calm in this position. As you can see, I'm not panicking here. And I'm just talking about the probabilities and talking about how it's working here, right? And this is why I want to show this, is because sometimes you can get stuck on this. But without the 5-minute structure here, right, this can come straight to, check this out, SL. But what happens here? Price respects the 5-minute structure and you end up rejecting this trade and reversing, and again holding a bit more drawdown. It's a long trade this was, and then eventually it creates a new 5-minute structure respecting the last 5-minute structure. And look, you can see how long this trade took. It took a while for this trade to come through. And then we're holding low volume for a while, just started ranging. But all the time while it's ranging, this is my lobster, put the lobster there to give it some power. All the time while it was ranging, it was respecting that 5-minute structure. And boom, starts flying towards TP. Right, so this was really amazing trade to be able to sit through that and to explain that and just see how probabilities work. And then eventually target, oops, skipped a bit too much. Eventually target was just absolutely smashed. Very smooth. Once the volume came in, that was it. Game over. Beautiful trade. So let me first explain what is an ORB. An ORB is an open range breakout. Essentially what you first look for is you wait for market open, and that's more importantly going to be New York Stock Exchange open at 9:30 a.m. Eastern. As you know, we have sessions, which is going to be the most accurate due to its volatility of breakouts. Now, if you try this in other sessions, it will be extremely inaccurate. People say you can use it in other sessions. It's wrong. It's really inaccurate. You want to focus on this on 9:30 a.m. Eastern, which is going to be the NYSE breakout. Now you can do this on different time frames, but the most popular time frame is actually going to be the 15-minute. And simply, it's extremely easy. You look for the 15-minute candle that closes at the 9:30 a.m. Eastern candle. And essentially how it will look is it will look something like this. You take the highs from the wicks and the lows from the wick, and you basically draw a rectangle like this around it, right? So we'll do it in white, and you make something like this, and this is how your open range is going to be. So essentially it's easy. What they say you do, or whoever made it says that you buy if something closes above the high and you sell if something closes below the low. So essentially buys above, sells below that open range breakout candle, okay? And it doesn't have to break out that candle. It could be in a range, and this is where problems start to occur. So what time frame do you take these breakouts on? Well, they accept a 5-minute candle close above. That is going to be a valid time frame to close above. Or even people try to trade 1-minute candle closes above as well. Now, both of these are flawed because you're missing a lot of context in this. Now, candle closes above or candle closes below, I like. That's a very key fundamental part, is to look for closes below. Close, not just a wick. If price was to wick past it, that doesn't count, right? What is a wick? It's basically this, if it doesn't close above. So in this scenario, if we were to draw an example, it would look something like this, right? So you'd see basically on, let's say, a 5-minute time frame, you would see price open, it would come up, it would try to close above and end up closing something like this, and you have this wick, and then you're stuck with an entry all the way up here and you're losing the trade because it reverses. So what's a common thing that happens in these open range breakouts is actually price will go up, grab liquidity, and then reverse for the rest of the session. And you end up being wrong. So we first need to solve that. So I'm going to explain all the common issues, and I'm going to explain how we solve for those issues and how my strategy actually works for it to get into these trades accurately. So the first thing is it reverses. You get direction wrong. The second thing is that most of the time you're putting tight stop loss to try get a quick push. That stop loss is going to be above the candle that closed above. But just putting it below a candle is not going to really protect your stop loss. Some people put it below the open range, which is fine. But the problem there is your stop loss is now massive. You're not going to optimize for risk to reward. And by the time you get a 1-to-1, price might also reverse again. And you end up losing. So we need to be able to get direction correct, get entry correct so we don't get stuck in a fake out. And we need to end up getting our stop loss placement in place. When we adjust these key factors, that's what I mean, I upgraded it, then we end up entering something that is going to be a lot more accurate, make a lot more sense, have a lot more rules that are simple, but at the same time going to increase your probability from something like this, which is maybe less than 50 at times, to increase to over 70% win rate. All right, so just this month I've taken 4 breakout trades using this strategy, and all 4 of the trades hit. One other strategy was actually taking the trade on the pullback, which I can make in a separate video, how to trade based on the pullback, not just the breakout, but I want to focus at one thing at a time. So the next step we're going to go is we're going to explain it basically how this strategy is going to work. So the first thing you want to do is you want to take the direction. If the previous daily closed bullish and the previous 4-hour close bullish, do not be taking open range breakouts towards the downside, because previous daily bullish and the previous 4 hours bullish, that means you should only be looking for breakouts to the upside. The same way for sells, if previous daily is bearish and previous 4-hour bearish, only be looking for downside breakouts. That is very important. Your breakouts will work. This is what we call a bullish bias and a bearish bias. This will drastically increase. Now, the biggest mistake people make is that you can't just take a random open range break. Here would be a clean example. This is your open range here. We're looking for buys today. You get your 1-minute entry and boom, it reverses on you and ends up continuing down. And you're like, what the hell happened? Then comes back up. You would have been in profit and boom, your trade ends up playing out, but you got caught in this mess. And this is just simple support and resistance. You need to make sure you are trading in clean zones. Mark that. That's the reason it rejected. It doesn't just disappear because you have an open range. We need to be more detailed. So whenever we look for a breakout, we're looking for resistance and a close above a resistance. In this case scenario, we're looking for a close above this resistance here. When you look left, there can't be any mess towards the left. Look how clean this was. Price replicated this exact move. The way we moved clean in the past is the way we moved clean in the future. That's exactly the zone we want to be trading in. If there was a bunch of resistances like this, look how messy this is. Look how messy this is, right? Look how messy this is. Look to the left. It's really messy here as well. So price likes to replicate what it's done in the past. And that's why we want to make sure that we're taking these trades in clean areas where there is clean candles. And I prefer always to wait for a 5-minute close above. So I'm going to jump straight into live examples that I've taken to really showcase this and how I've taken these trades. We're actually going to go into a US 30 example. This is a trade that I took and I want to show you exactly the details of how I wait for a candle to close above and how I'm waiting for structure, a resistance to form. Okay. So what's super important is we want a resistance to form, or if we're looking for a sells as support. So I'm going to show you how that looks right here. It's going to look something like this. So if we're looking for a bullish, we're looking for, let's say maybe 2 candles close bullish. Then we're looking for at least 1 red candle. 2 would be better, but 1 is acceptable. And then we're looking for what? We're looking for a close above that on a 5-minute candle. Now this here becomes your resistance. Now towards the downside, I'm going to draw that quickly. Towards the downside, it will look something like this, right? You have bearish candles, you wait for that 1 bullish candle on 5, then you take close below. You need it to close below, and then you target. Where's your target? Your target is the next level or a 1-to-1, right? So you're targeting the next resistance, or if you're looking for sells, you're targeting the next support. So let's have a look at a live example. This is a trade that I took. You can see here, entered break of high, closed here at a 1-to-1. The trade looks like this. That's where my stop loss was. We place stop loss below the candle that closes above, right? That's the way that we do it. This candle closed above here. I took it break of high to get a continuation. I would like to replay this trade. This would be your typical open range right here, but we don't really want to buy here, even though today it sort of played out and you did get a push. We don't want to buy there because there's all this resistance here. Remember, I want to buy above clean zone here. So I'm going to replay this so we can watch it play out tick by tick. So we're going to skip candle here. This was my entry candle. You can see how it created perfect support above here. We have that one bearish candle, and simply all I did is I'm like, okay, place an order here, and we're gonna do a buy stop. It was break of high. Now I put stop loss back in the range. Typically you want to put it below the candle that closed above, but I chose to go just back in the range to basically more advanced stuff, understanding that this is a structural point, so it is fine to do that. And then let's go see how this trade ended up playing out. Slow it down a bit, and let's place the trade would help. Let's put it at like, 2, buy stop, and that's how it was. TP was 1-to-1, and then let's play the trade here. So it opened beautifully here, no top wick. We always want to enter break of high because it could probably just reverse here sometimes. And then this is exactly how the trade was live, so you're watching it in replay. I'm using a simulator called Pip Labs. It's a web-based simulator that allows you to view the trade. So see, if I didn't wait for break of high, you could have been stopped out, right? Otherwise, this is just giving me more confirmation. So essentially, boom, broke the high, got into profit straight away, and now I'm basically chilling, just allowing price to do it. So I always recommend back testing what you learn. So go in a simulator and simulate. Don't go live market and lose money on things you don't know. Prepare for it by actually simulating. That's what simulators are built for, and prove to yourself that this works. I know what I'm doing, and I have a strategy with data. So had some drawdown, that's part of the game, and then it ended up being smooth. Nice volume came, and then boom, hit TP there. So now I want to discuss about making a trading plan. Trading plan is extremely important and something that you need to have when trading. So we're going to dive into a trading plan and look at that. So the first part about this plan, I will make this plan available in my free Discord group under resources. Simply visit resources in my free Discord group and you'll see this there. So before I get questions about that. Now, if we're looking at a plan here, it's very important to have a routine, right? A plan is essentially a routine. And the first part of your routine is what time you're going to trade. These are the sessions we have, right? We have NY, we have NYSE, we have London and Asian. My sessions I trade is going to be London session, right? Which I'm going to make here in green. And it's going to be NYSE and NY actually together. So we're going to put those as red because NY is normally put as red. So those are my sessions I'm going to trade. Okay, Asian I don't trade. I'm sleeping during that time. So my main focus, my 100% win rate came from only trading NYSE on futures account with trading only Dow Jones, right? NY I trade gold as well here. And that is my trading session. So you need to dictate when is your trading sessions. It could be one session, it could be all three. I don't recommend 2 sessions is perfect. And you need to dictate how many hours you're trading. I'm trading in London about 2 hours, and I'm trading in New York about 2.5 hours, okay? And with a gap in between. So what do I mean by that? You cannot show up to the chart every day at random times. Showing up to the chart at random times is going to lead to inconsistency because you're not going to replicate a consistent move in a consistent volume time. For my strategy, showing up, since I'm taking a session trade, showing up during a session is the time I want to trade. So for me, the perfect times I found to trade is going to be 1 hour before London and up to 2 hours after. So I just keep the session, right? Maximum in your sessions, you want to be trading about 1 to 3 hours. Those are your peak volume times. For example, in my time zone here, NY opens here and my time zone at 4 p.m. NYSE is 5:30, okay? I will look at the charts till around 7. So I'm 4 to 7. That's 3 hours, right? There might be a day where a trade comes 7:15. If I'm around, I'll take it. If not, I'm going to get off the chart. But if a trade is coming 8, 9, 10, I don't care. That's out of my trading routine. I need consistency because over time, to have all data like this is all taken similar times. I want you to notice the times here. Here's all the times in my journal. It's my public journal. I've taken all my trades. 12, 12, 11, 10, 10, 11, 11, 10, 9, 12. You can see the time consistency there, and that's how I've been able to generate consistent results. So once you choose your session, you can choose. If you're a busy person and you can only attend 1 hour per session, then that's fine. You can do that. Just make sure to go backtest what is the best hour. Obviously, if you were trading indices, your best hour would be after NYSE. That is obvious, right? If you're trading something else, you could figure that out, okay? That's going to come from your testing, which is why it's your plan, okay? For me, if I was, let's say, trading London, I would find the power hour, right? I would say, okay, my best time for London is going to be probably just after Frankfurt Open, you know, that's going to be my best time. So once you have that, you can say, that's my times I'm going to show up to the charts. Now that's my time at the chart. So set a max time limit for day. Don't be sitting there 8, 9, 10 hours at the chart. You're not going to get much done. My next part of my plan is going to be news. I need to check something like Forex Factory, something basic that I can go in and see what time do I have news, because if you're taking trades and getting messed up by news, it's silly, right? It's something we can easily avoid. Make sure on this to use something like Forex Factory and see, let's say today I'm trading GBP pairs. I need to worry about news coming out at 10 a.m. my time. If you see my journal, I've taken trades at 10 a.m. So if I didn't know that today, I could take a trade on the GBP and then lose. So you're only worried about red and orange folders. All these yellows, don't worry about them. They're not big enough to impact price, or otherwise you're just going to worry about every single hour, right? So only the red news is important. And, you know, I'd recommend spend some time, learn about the news. It's good, right? Something I teach, something I do every single week in my webinars, in my exclusive group, is discuss fundamentals. Fundamentals is a big part of the markets here. So you need to have some type of markup, okay? I have so many videos on this channel, and I will actually, I will make a new playlist of the videos that kind of, and it will make sense once you finish watching this video, so make sure to stick to the end, but I'll make a playlist that's going to help you, and I'll link the playlist probably somewhere up here or at the end of the video, or just go to my playlist and you'll see 2025 core video, which is going to talk about my entries. It's going to talk about my markup. So you need some type of chart markup. You need a process where you come to the charts and you look at, okay, here's my routine. So my personal routine is I check what is my bias, right? So I have videos about bias. I'll put that in the playlist. I see what is my bias today. Based on my bias, I do my chart markup from daily time frame down to 15-minute. So I have all of my possible support and resistance areas. This is my markup for gold. Very simple markup today on gold, right? I mark up here my key levels. And I check, okay, these are the zones of interest and this is what I need to care about. Okay, so that is my steps I do, right? I go through my markup here, and you need to have that routine. You do that first. The next thing is you wait for your setup. And that's how simple it is. It's wait for your setup. Just stick to the end of the video because we're going to get into some juicy stuff about risk management and stuff. But you need to get your setups. Now, again, I'm going to post some setups here. If you're interested to learn a little bit more about setups, you can watch that, and about my setups, right? But this can apply if you have your own strategy and are watching this video. But you need to have these setups proven and tested. Okay, have data on these setups. Obviously, I have live data, but before I even made these setups, I back tested them. I simulated them to get good at them. I condensed them into a few specific setups. And then obviously this is forward tested data on them in the live markets with my live trading as well. So you can use softwares like PipLabs. PipLabs is a great software that will allow you to backtest and practice your setups, and then it gives you a dashboard, and on that dashboard you can see all of your statistics about that setup, so you don't need to journal it one by one. It will just tell you everything. So you can check out that website. Will help you a lot to figure out how to backtest, and it's something we created to be very powerful. So you need to have data on that. I don't care if some guru told you that it's the best strategy in the world. Don't trust them. You need to see that, because it might be the best strategy for him but not the best strategy for you. Super important. And we don't care about their results. We want your results, right? And that's what I had to find out in the market, is that it only matters what works for me. If it doesn't work for me, and I can't even be profitable in backtesting, no way I'm going to make money in live markets. So you need to make sure it's tested, something that works. Risk management, pretty simple in basic terms. Don't be going risking stupid percent, but also don't listen to these guys saying only risk 1%. You don't have to risk 1%. You can open an account, right, and do something called monetary risk. We have leverage in trading, right? We can use that leverage. So if you have something called monetary risk, it means that what you're doing is you're saying, I'm happy to risk $500 per trade. That's what I'm personally comfortable with. But that $500 might be 6% of your account. That doesn't matter. Account balance will just move quickly. So if you can psychologically handle it, doesn't matter. You're risking what you accounted to lose for. The point is you need to risk a consistent amount per trade. Don't risk 1% in one trade, 10% in another trade. No, it needs to be consistent, right? Are you noticing a trend? We're talking about consistency. Big part of my trading plan and risk management is number of losses. So let's say today, which is not a good idea, I was looking for sells. Okay. If I was looking for sells and let's say I took a sell here, okay, and then I lost obviously. If that happened, I'm going to give myself one more chance to play out my idea. Let's say again, I see a resistance formed, retest, and I take another sell here, and again I lose, I call it a day. Because that means today I'm highly likely just wrong, okay? What could end up happening, which is a disaster, and this is how you end up losing a shit ton of money, is that you end up, okay, right? You end up in this type of scenario. You end up where you think you're going to take a buy, you take a buy, it fails, then you try again, it fails again, now you take sells, because now you stop trading after those two trades. You didn't do that, you continue trading. Now you take sells, now the buys play out, you take buys again, the buys fail again, and all you did is end up in a range and you got chopped up 10% down in one day. FOMO trade, everything goes to shit. So 2 trades losing in a row, call it a day, reanalyze, come back tomorrow. Not your conditions. Markets didn't support you. I also like to have a rule, total trades of 3 trades a day. Don't like to take more than 3 trades. I find like over time, that's a perfect number. If I'm taking more than 3 trades, I start to get greedy and probably give back the money, okay? Now, here's a cool one. Prop firm risk management. Now, this is not financial advice. None of this information financial advice, but this is something that I found is pretty cool to help people, okay? When you are on a prop firm, the best thing you can do is when you're funded to risk 0.5 to 1%. You don't need to be risking crazy amounts when funded because that is when you actually get paid. But you do not get paid to pass phase 1. You do not get paid to pass phase 2. You only get paid once you're funded. So that's where the real risk management. So phase 1, phase 2, there's something called speed passing. If you're good at trading and you're trying to pass as fast as possible, you can risk 3% higher risk to pass in the hopes of passing faster. And sometimes that's more efficient than spending time trying to grind an account and then end up just psychologically being bored because it's not rewarding you, okay? If you're a beginner, you need to do that because you need to learn to trade. If you don't know how to trade, don't speed pass an account, you're gambling because you don't know what you're doing. But here's a cool little metric I made. If your account is plus 1%, you can risk 1 to 2%. That's pretty good. 2% not bad to pass an account. It's also not too crazy and pretty safe. If your account's at break even, I like just risking 1% because that just keeps you safe, gives you some buffer. And then the next trade you can risk 2%. And if you lose that, you're only down 1%, and then you can risk 1% again. But if you're down minus 2%, now you can reduce risk to save your account. So all of this drawdown technique, this is to save your account, okay? Even at 7% drawdown, you could try grind the account back. But if you're a good trader and you're not trying to waste time and you've just hit a bad unlucky streak, which can happen as a trader, risking, full margin, going 3% plus, risking even risking almost the daily max loss limit, can get you back to that stage and not waste time, okay? But you need to budget accounts. You need to budget your trading. You need to say, in this year, I'm going to spend X on trading, including education, including tools, including personal accounts, including funded accounts. If you blow that budget, you are not conducting business properly. Trading is a business. You need to treat it as a business. And in order to have a business, you need to be able to conduct that properly, okay? Practice passing accounts. That website I showed you, it has something called a prop firm simulator. You can simulate passing real prop firm challenges with the same high stakes environment, okay? Which is super important. If you're not practicing to pass account and then go do it, you're gonna do, it's like a basketball player practicing to play basketball, but then going and playing in the NBA after playing college. Like he knows kind of what he's doing, but it's not enough, right? He needs to know the different type of player, how much better they are than him, okay? Psychology is personal. It is not something that you're going to share with everyone. It's going to be personal. People overhype psychology. They think it's super crazy and they think they can teach you. No. Psychological control is earned. It's not given. It's not taught. Obviously, there are some psychological things like FOMO, fear of missing out. If you feel like you want to jump into a trade, you probably missed it. If you missed the best entry of the session because you were on your phone, you went to the toilet, don't re-enter. You missed it. Too bad, right? Or you hesitated, okay? Don't be greedy in TP. You had a plan for a reason. Your job is to follow the plan. You don't follow the plan, you're doing something bad. Don't force a trade for no reason. There's many days in the market, but there's limited days of you losing on your account. Hesitation, lack of confidence, practice more, learn the strategy more. Hesitation is normal. I hesitated a lot in the beginning, and even when I increase risk, I still hesitate, right? And as I said, it's mainly personal. The last thing here is journal. Journal so you can collect data and then have someone to analyze that data like me. I encourage people in the exclusive group every single week. I ask someone to volunteer on our webinars to send me their journal. I go through the journal and analyze the data and see what they can improve on and stuff like that. If you don't give that, people like me can't help you, or you can't help yourself to analyze your own data, right? So you can join places like that to help you speed up the process. That's in the description if you're interested. But the main thing I want you to do is, no matter what, if you're not journaling for me, you're not journaling for other people, journal for yourself. And you can make journals really complex, where you journal and actually put your emotions, what you felt during the trade, blah, 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 which I think is too mentally straining. You need a journal that just has enough. And for me, what's just enough? I want to know how much I made percentage wise or R wise, how many pips, just so I can gain average pips per session, because you can find that out through how many pips you're seeing of a push, right? I want to know what setup it was I took. Here I put the time and the YouTube link to just show the trade that I was taking, because this is for also transparency. But I want the time, so you can do the time, what happened, and then of course an image of the trade. So what I get people to do, this is, for example, someone in the group, is they write a little markup like this. It doesn't have to be that detailed. This guy's putting in a lot more effort, but that's something you can do. At my stage here, I'm not writing anything on my charts here. I just post a screenshot of my chart like this. I don't write up on it because I'm not at that stage where I'm trying to refine, but I'm actually always refining. It's, you're always a student to the markets. So this is going to be an important section. This is called trading services. So you've probably seen online, there's so many different services, signals, you've seen bots, you've seen, I don't know what, courses, you've seen this, that, mentorship, one-on-one, journaling platforms, backtesting platforms, copy traders. What do you need? What do you need? Trade managers. So I'm going to go in and tell you exactly so you don't get scammed, because 90% of you, if you don't listen to this, are going to get scammed. You do not need to pay for a video course. Video course should always be a plus. You do not need to pay for a video course. They are not going to help you. Video courses are purely information. You need to only use a video course. Accessing information is amazing. It's going to give you a lot of benefits, but without application of that information, it's useless to have it. So if you're paying money just to watch a video course, not going to help you. You need the video course with someone to help you to apply it, okay? So that's in the education forefront. Signals, stay away. Unless you are trading with people, don't just blindly follow signals. Many of the groups are hit or miss, and if you don't understand the strategy, it makes no sense to follow signals. I know majority of people lose who take signals. At the end of the day, if signals was super profitable, then there would be no need for independent traders. And also, if that signal provider stops providing, then you don't make money. If they lose, you lose all your money. You don't know if you can make it back. You're searching for more signal providers to try and make it back. They make you lose money because they're not trustworthy. And in the process, you've lost $10,000 paying monthly subscriptions, trying to make money back, and you're just going down a pit. And at the end of it, you don't have a skill that you can actually learn to make that money back. So now let's think of it realistically. You are signing yourself up to failure, relying on someone to get everything right. And we know that not everyone gets everything right. Even the best of traders have bad months. And if that knocks you out, and you can't recover from that, then you're stuck because you're left without a skill, whereas an actual trader will have a skill, right? So moving on from that, what should you actually pay for? Pay for people's time, right? Pay for people to help you with application. For me, I have a group. That group, we work together, we trade together daily. You're there to answer questions. We have a full video course with more information that is just recorded from our webinars and stuff, and in-depth, really minute stuff, because this trading is full of information. I'm giving you the core information here, but there's small stuff, how to manage on 1 minute, how to do this, but I'm there to help you apply. I'm applying concepts. We are speaking together. We are part of a community. We are a trading floor. We trade together. That's what you should be putting money in, because that is something that helps you to apply. It's not just information. You are working closely with people who are better than you, and you're getting access to people who have more experience than you to learn from them, to be part, to have a why. You need to have a reason why someone, to work together. Teams will always beat individuals because they can do things faster. And also you want to compete inside of the group to kind of feel like you can do better. So that's good. One-on-ones are good, but you have to make sure the person you're learning for is someone legit, guys. There's so many people out there scamming. They don't show you their strategy working live. They have no background. They just have fake numbers that they show you. Wow, look, I made 600K, I made 300K, but they don't show you how, or they briefly give you a breakdown, and you don't know if it's something that works. Like for me, the best thing is to see something live, see something, consistent over time. That's the only way in this industry to know if something works, is to see something happen on a day-to-day basis, in my opinion. So make sure you're learning from people. It is great to work one-on-one with people, But at the end of the day, it is something where you need to make sure that they are reputable, right? The last thing that I want to discuss here is trading tools. These are amazing. These are something that are going to be very important, something that are going to help you drastically. The number one for me is a backtesting tool. You need to practice. You need to practice how to get good at strategies. You need to practice how to trade. This is going to be extremely important, right? Because like professional basketball, football players, you need to practice. Practice is going to be very important. That's why I started my own backtesting software, and we are hopefully now aiming to be the leading backtesting software in the industry, and it is something amazing. So use those tools. We have journals involved with that. Journaling tools are great as well. If you need, tools to help you like copy traders, trade managers, those are all great stuff to use as well. Just make your life easier in trading, and don't be scared to invest the 10, 15, 20, $30 to have these tools. It's really worth it long term. Don't be cheap in this industry. If you're being cheap in this industry, the market's going to treat you like shit. It's going to take way more than you can imagine because you're not investing in actually being ahead of the curve. So do what other people are not doing by making sure that you are using every tool to make sure you're ahead of the curve. So that's pretty much it. What I want to talk about trading services. Please do not fall for these bots that are promising you gains. This doesn't work, guys. Just doesn't work. Focus on you. Trust me, it's the best. I know countless of people, including myself, who've been through this. It's not worth your time. So let's get back into some more juicy stuff. So for those who have watched till this far, congratulations. You guys are really putting in the work, and I love to see it. This next section is only for the serious traders, which is trading psychology. Once you learn how a strategy works, it's all a psychological game. And I'm going to give you a breakdown and a quick breakdown of psychology. Psychology is an ever ongoing thing, something where it would be beneficial to be part of communities, be part of systems to where you can benefit of having people around you to keep you accountable, right? But I'm going to give you tips, routines. I'm going to give you a whole breakdown of what you can do to help your trading psychology. So let's get into that. So before we start and go into this diagram that I've made you, this is my public track record of every single trade I've taken in London session over the past 3 years, done on YouTube Live from entry to exit. And this is why I want to talk to you about this, because this is coming from experience, not opinions. So many people online will tell you if you can't follow a strategy, it's your psychology. Your psychology is off. Psychology is a massive part, but it's overhyped. And simply we try things, we try to get better, and it always lets us down. It always lets us down. We always FOMO trade. We always, feel so guilty for the actions that we take. And we blame our psychology and say it has to get better, but it doesn't. We lose money. We try to change strategy. Maybe we doubt the strategy. Strategy doesn't start working. Then it comes a whole round circle, and then we start doubting ourselves and our psychology, and it becomes a total mess. And this is the cycle that we go through, and there's a way to get out this cycle, and it all starts from this. It's first accepting that we are human and we're going to have things that are going to annoy us and make us make decisions, because that's just part of being human. We experience so much different emotions through day-to-day life, towards loved ones, towards people we don't like. It's just how life works. Trading will be no different. It's just going to bring out all of these emotions at once, and you need to learn a system, which I'm about to show you, or how to manage it. And I've prepared this because I just want to make one psychology video that will just, do everything and help you guys. So definitely do, leave a like if this helps. It does support the channel here. So core principle is psychology is personal, right? We discussed that a bit. And your psychology is unique. Your reactions, discipline, and emotional triggers will define your edge, right? So this is the difference. Everyone will react differently, and ultimately your journey is going to be personal. So since it's personal, the biggest problem is people don't understand enough about themselves. You don't know your strengths and weaknesses because you don't do things outside of the charts to bring out your strengths and weaknesses. If I were to ask a question about you, what are your strengths and what are your weaknesses? Because your weaknesses are going to be drawn out from the charts. The charts are going to draw out your hesitation, your timidness, maybe your overconfidence in life. That's what's going to be. And your strengths is something you can use to your advantage to make sure you channel that energy properly, right? That's really important, and you need to track that. You need to track that and build off that. And as I was saying, you need to build discipline outside of the charts, right? So this is a massive thing that most people don't discuss. Many of the way that I've able to develop success is because of my success outside of the charts. Me being a sporty person, building a disciplinary hobby, such as having stuff that I achieve to be better at. You need to have something that you want to be better at, whether that's you playing sport, whether that's you having a hobby, could be something, whatever it might be, even gaming. I mean, I prefer you do something, but it has the same concept of you need to strive every day to get better and solve for what is going wrong. So having gym fitness is really important, not only for mental health, but if you're physically performing well, you're going to mentally perform well. That coincides with having diet. I can't tell you how just fixing these simple factors of your life, such as fitness, diet, and sleep, can drastically impact not only your trading, but everything else. Trading is being an entrepreneur, and you're competing against people who are way more advanced than us. We have a disadvantage coming to the market. So we need to take every single advantage that we can take. And if we're showing up to the charts unfit, we don't have our mental right, we're not feel good about ourselves, we're not eating well, so we don't have a good diet, not clean food is going in our body, so we don't know how to act, and we're not sleeping properly, it's not going to work well on the charts. Those emotions that you already have are going to do what? Are going to be amplified, is what I'm trying to say. So you need to have these. You need to challenge yourself. Challenge yourself. Do something difficult. In my group, I have a fitness chat, and people challenge themselves to do, 10K runs and stuff like this. And this is exactly it, building that discipline outside. And it's going to be really, really important. And your habits outside trading will shape your inside results, right? So daily routine, this is very important in just general things. You need to have a plan here, right? So here's a simple plan. I can go more into depth about this. And really, this topic about psychology is massive. I've put this in a simple one-pager to make it really clear and give you actionable steps you guys can take. But really, I've gone in depth about actually how the brain works. I've had webinars on stats and stuff because something that interests me as well. So very simple here. Review your levels, right? This is my pre-market. What I always do, I have a bias, I check fundamentals, and you tell yourself, just the act of telling yourself, I will stick to my plan today. Just tell yourself that. When you're in your trade, just make sure you're following your plan and avoid being obsessed at the screen, trying to dictate every single move and let that emotionally cause you. Because remember, what stuff on the chart, you have to find what on the chart causes your emotion. Does big candles cause your emotion? Does missing moves cause your emotion? And try to pull yourself away from that. So that if I'm in a trade and I'm on the 1 minute and the 1 minute's causing me stress because I see it doing things I don't like, I need to avoid that because that's going to cause emotional issues. So next thing is obviously journal, put screenshots, note your emotions. You can rate your discipline and only focus on one improvement. This is massive. People make these massive complicated journals and they're really good at writing it, but they never apply anything because there's so much. I felt this, I felt that, blah, blah, blah. I see an essay. No, focus on only one thing to improve, and that is. So these are the common problems, and these are some basic solutions I met. As I said, these can go into more depth, but these are, FOMO, right? Fear of missing out. Fear of missing a trade. Use a checklist. Wait for confirmations. If you just have a simple thing written out on paper in front of you, read that before you enter. Revenge trading. After you take a loss, force yourself for a timeout. Force yourself to do an action that you have to walk away and set specific trading times. That's part of your trading routine where you have to maybe go do your hobby. Welcome to trading. Or maybe you have to attend a job, attend a meeting, whatever it may be. This is how trading works. Over trading, you have to set a max trades per day and you will break that. You will break that rule, but if you consciously think about it every single day and it's on your mind, at some point you're going to actually learn to do that. And that's why you need to work on this outside of the chart. Right? And then fear to enter trades, you need to reduce size and backtest. These are the two basic concepts. Because you're just not confident with the strategy, not confident in yourself. So backtesting will show you that the strategy works. You can use any backtesting software, but make sure that you are not just replaying, you're actually backtesting, viewing it in a real life scenario using tick data. Pip Labs is my favorite, of course. That's the one I would use. Reduce size is going to be a great one in the market to just make sure you're focusing on process. And if you're impulsive, read a note on your desk before entry. That's the one. Like, read the note. Does it follow those certain plans? Go. So a little bit of a feedback loop I built here. Journal your trades. Reflect on that journal. Adjust it. Remember, adjust that one thing. Backtest to get better. And then repeat. If you just do this cycle, it's going to drastically change your psychology. Last thing I'm going to end with this video, keep it nice and short, is, and this is what I've wrote, and I want you guys to take this and go away with this, is that trading psychology is a lifestyle. It's not a skill. To learn to be a different person. The person who's maybe listening to this video right now is not the profitable trader that they want to be, and that person has to change. So it becomes a lifestyle. It's not a skill. You have to live every single day through this, okay? And I thought it was a skill. Now, obviously, it's a skill to acquire the psychology, which I can go into depth of how to do that in different videos and whatever. Let me know in the comments if you would like that. But this is something I really like. You don't rise to the level of your strategy. People think if I learn this strategy, I'm gonna get better. No, you only fall to the level of your discipline and mindset. So read that again before you hop off the video. If you've watched this far into the video, you're obviously someone who's serious about becoming a seasoned trader. And I don't blame you, because once you apply my strategy and the concepts that you learned in this video and actually start to apply it and work with and use all the tools available to you, it's the simplest money that you're going to make, and you're going to think it's like a glitch in the matrix. To take $1,000 to $2,000 wins in 5 minutes, that's absurd. We need to realize in the real world that how much time it takes to have a skill that makes that type of money in 5 minutes. And the opportunity it's given others. I've seen people whose goal was to be funded, and now they're getting an average payout of $2,000 in our group as a first payout. That's insane. My first payout was $100. We're seeing people pull out $5,000 payouts. You can see I'm popping it all up, but it takes time. And this is what I want to say. It takes time, and people who actually put in effort and use the resources available and don't just skip along thinking that they can cheapskate their way into a full-time trader or to make money like you've just seen. But the number one thing that all of these guys do compared to other people is they take action. They take accountability action, and they invest in their time properly and use resources to help them get further toward their goal. Becoming a profitable trader isn't a complex algorithm or rocket science. It's just exposing yourself to the right information and around the right people who can help you get towards the goal and give you right information and nurture you towards becoming a profitable trader. You need help. You don't need information. You need application. There's countless educators out there, but it's rare to find a community where you can actually pick at a profitable trader's brain. So to end this video, I want to leave you with 3 options. Option number 1 is you leave this video and you apply absolutely nothing and you just have the information in your brain. Not going to be the best. Option number 2 is you actually are a bit smarter and you try to figure this out yourself. More complex route, more time wasting, more money lost in the long run, but it is totally plausible. That's why I'm happy. I've put thousands of videos out on YouTube to help people, maybe who can't afford stuff to get them to where they want to be faster, but I want to protect people from losing money. So I put out real information. Option number 3 is only for the people listening to me right now. Say option number 3, because 90% of people have clicked off the video. And this one's going to be specifically for you guys because it shows me you guys are committed. So if you want to work personally with me, join a community that has helped hundreds of others and be part of something that's not a scam. This is something I've worked on for years, found out ways to actually generate people results. That was a skill I had to learn. This is a proven system that I've worked. This is a proven group that is my sanctuary in this mess of an industry that I have used to also push myself to limits and keep reaching new heights and bring others with me. So if you're serious about that, there's the first link in the description, which you may be seen. All the information's on there. I won't discuss anymore. I appreciate you guys watching this course. Hopefully you guys have liked this. Hopefully it has given you so much value and was a pleasure to make this. Take care, trade sharp. Hopefully see you on the channel more and more, and hopefully catch you guys very, very soon. Peace.